Let's talk about this article on Jerry Jones. If you don't know who Jerry Jones is, he's the owner of the Dallas Cowboys, which is an American football team based out of Dallas, Texas. Jerry Jones took control of producer Comstock Resources, ticker CRK, about 4 years ago when natural gas was at a bottom with the eye towards the liquefied natural gas export terminals along the Gulf of Mexico. And now, because of booming LNG exports, some of the highest gas prices in years, his stake is worth about $2.6 billion, more than twice of what he paid for it when he originally invested. Natural gas has been a top performing asset over the past year, thanks to demand being greater than production, weather events that drain stockpiles in the war in Ukraine, which is prompting European utilities to replace Russian fuel. So we talked about this before on this video, is that Russia was a big producer of gas, which is turning into liquefied natural gas. And Europe is looking to replace their production with alternative production, which put a lot of demand on liquefied natural gas or gas coming out of the United States. And that created a great opportunity for people that wanted to sit back, do their research, and kind of understand the market. And this is really how you make money in this market. You have to be looking at what other people are not looking at because they don't really understand how the market is actually constructed, right? And Jerry Jones, being a savvy operator in the market, even though he was taking a long-term view, because he was positioned when the market changed, he was able to benefit from it. Comstock, based out of Frisco, Texas, has been a star, especially since Russia invaded Ukraine in late February and set off a global scramble for gas. Shares are up around 81% since then. So since February, shares have gone up around 81%. For every $1 the stock goes up or down, Mr. Jones' 66% stake adds or loses around $182 million, right? Mr. Jones called the executive of Comstock in 2018, wanted to go long on natural gas. Prices were in a multi-year slump, but he was looking ahead to future demand. So when they were in a slump, he was looking for demand. One of the things that you're going to notice about energy companies, which can make them different than a lot of other companies, there's a lot of capital expenditure in the energy space. It takes a lot of money to find new locations. It takes a lot of money that you have to spend to extract, things of that nature. Now, you have some energy providers, and what they do is they locate the access to the energy, whether it be oil or gas or even coal. And then what they do is they sell that contract to somebody else. So they subcontract it to somebody else over a specific amount of time. Then you also have other companies where they actually finance their own extraction. It all depends on how they want to play the game, right? So you got to really understand that. So often when you're looking at the balance sheet of an energy company, the balance sheet may look terrible, right? But you have to understand they're still selling a product that is very much in demand. Therefore, because the balance sheet may not look great when the demand is not there, the company looks terrible. However, when that demand turns around, they can now perform at a very high level, but they still may carry a lot of debt from all those years in which they were extracting. And a lot of times the cost to extract was less than what they actually get out of the market. And that's one of the things that can make the energy space kind of a unusual space where it's not as straight line as maybe looking at other companies. So Mr. Jones swapped North Dakota oil wells worth about $620 million to Comstock in exchange for a controlling stake. The idea was to use the cash flowing from the oil wells to refinance and drill in Haynesville. The next year, Mr. Jones put up about $475 million to help Comstock buy a rival, which put his investment around $1.1 billion. Natural gas futures at that time were $250 per million British thermal units and headed lower. And in some markets, drillers couldn't give away the stuff. And that's what we talked about before. We talked about contango before, what that actually meant. It's on other videos, especially when we start talking about energy production and also delivery. Natural gas, oil, they're traded heavily on the futures market, which means that traders determine the value of what's being produced, not necessarily the company. Comstock sells around 40% of its output to LNG shippers. Mr. Allison says he expects that to rise to about 20%, and for Comstock this year to resume quarterly dividend payments that had stopped in 2014. I looked them up in 2014. They were paying at 62 cents dividend per share. That's going to be the end of that article. Here's Comstock's chart. We got it on the 1 year, on the weekly, and what we see is that February it started to move up really, really hard. So it was trading at around 740, 750, and it hit its top at around $20 in January, February, March, April, May, around $20 in May. and it's gone down since then because we've seen a lot of profit taking across all energy sectors over the past few weeks. What I want you to understand is that Jerry Jones was able to successfully speculate on the oil market turning around. And this wasn't, I don't believe, a short-term play for him. You know, he's at an age to where pretty much everything he's doing is going to benefit. It's going to really come to fruition when he's no longer on the planet. However, because of macroeconomic situations, because of what things are happening globally, he was able to see a really appreciation in the value of what he invested in this company. We talked about his original investment is pretty much as double. So he's got almost 100% return off that. When you're looking at companies to speculate on, you really want to kind of understand the scenario. And also you want to be looking at what everybody else is not looking at. So he was able to take advantage of what we'll call first mover advantage. He got in early. It doesn't mean that every situation that you get in early is going to be a good situation. It's a situation by situation narrative. However, the idea that speculating is wrong, it really means that you shouldn't invest in anything. Because even if you buy the overall S&P 500, you're speculating that the value is going to be greater at a later date than when you originally bought it. However, you don't know that China, if they invade Taiwan, the market will probably lose 70% overnight. So then therefore what you invested won't be worth more than what you put in. Because if China decides to invade Taiwan for whatever reason, I will bet you pretty much all the money I have in the world that the market will lose 70% overnight because of the impact of that particular situation, because now we're in a world war. Therefore, every investment, no matter how safe it is speculation unless you're buying U.S. treasuries. That's the only guaranteed investment inside the United States. And that's what I want to really help get you to understand what speculation really means, because they use it as a pejorative, as it's a negative term. And in reality, if you're investing in anything except U.S. treasuries, you're speculating. So because Jerry Jones understands that, because he's worked in this particular space, a lot of these Texas guys, they understand what it takes to be successful in energy, and they understand that it's boom or bust. They really get that this is an area in which they're very comfortable in. They really understand what speculation means, and they don't have a negative attitude around it. But a lot of times when we're looking at 9-to-5 working class people, they've been programmed that like the only guaranteed return on an investment is a 401k. But really you're investing in the overall stock market, which means there's no guarantee. But this is how they've been programmed to keep them in 401ks, right? If you got any questions, hit me up in the comments. David W. Williams, also known as Diamond Dave. I'll talk to you later.